Good afternoon, everybody. This is Patrick MontesDeOca with Trading Talk Live. We have a real special guest today, Mr. Stephen Kalayjian, co-founder and chief market strategist of TicketTocker. Good afternoon, Steve.
Hey, Patrick. How are you?
It's a pleasure. It's a pleasure to have you on the show once again, and thank you for taking the time out of your busy schedule here. How things are going?
Good, thank God. There used to be a saying, one day at a time. Now it's 1 second at a time. Good. Just thank God. Just keeping busy. Going in every day, and I love teaching and calling out the trades I'm doing in the markets, and really, the volatility's here, and some really great setups, and a lot of great patterns and correlations and positive, negative divergences, and really some great opportunities here. And I love when people are really grasping it and seeing it and doing well and being consistent. That's all I ask for. But overall, I'm happy. I'm blessed. This too shall pass. Shall pass. And we're gonna get through this.
It's a very needless to say, historic time, and I wanted to get your kind of view. We talked about a month ago, if you recall, and this was before everything kind of fell apart, and obviously what you're talking about is the fundamentals have been broken completely. Everything has been shattered, so to speak, and from the way I see it, on one hand it's a kind of a crisis kind of a situation on one end of it, but the other side of the coin, like you said, it's absolutely right that this has created an incredible opportunity.
Well, I think it's an incredible opportunity for people who day trade the market.
Right.
I don't think it's an incredible opportunity for people who are buying or their pension funds, or I think that you went from a booming economy to almost, I think it's a depression. When you have 26 million or 24 million people out of work, in a matter of 44 business days, 44 days.
Right.
So I think that this is unprecedented.
Right.
And so I don't care how you want to phrase it. During the Great Depression, we had 25% unemployment. They said if the numbers hit 26 million to 28 million, we could be 32% unemployment.
Easy.
So
right.
And negative 10 GDP. The big question is, are you going to risk your health to go back to normalcy? I was in the elevator yesterday, and a woman went in the elevator with me. When I was on the first floor. I was going to the third floor, and I stopped at the second floor. So people are even skittish to do that. Who's going to go to a bar, restaurant, movie theater? Who's going to go on a cruise or another airline? I think, and even if you had a vaccine, how do you know that's the right strain? So I think there's still a lot of open-ended questions. The government said 3 weeks ago, to stay 6 feet apart. I said, screw them, they're lying. I said, you got to wear a mask. And then 2 weeks later, you got to wear a mask, right? So, or something over your mouth. So the confidence is what's going to really trigger the rebound in the economy. You don't go from, 3.4, 3.3, 3.5 unemployment, okay? The Dow runs 5,000 points off the low. You're not going back up to 30,000. Are you crazy? Got one of the biggest bear flags I've ever seen off a weekly chart. And gaps way below the market that are going to get filled. I think you got to be on morphine to be owning stocks up at these levels. I don't care how much money they throw at it.
Let me ask you a question, because what you're talking about is, I think the bigger picture, But one of the things that I noticed, for example, on March 23rd, when the world was ending, so to speak, and the Dow had dropped, down, I think, was 38% at that point. The E-mini made a low of 2174 during that time. And it was almost like the opposite side of the coin, that as the panic was setting in, and you could feel the panic, on CNBC and all these commentators and so on and so forth. And yet the market rallied that Monday when we went electronic. The thing I find really kind of maybe not so surprising is that Friday, President Trump, had a meeting with some of the biggest hedge fund managers, some of the biggest airline executives, Boeing, Northrop, in closed doors. And obviously the unknown was, what's going to happen on Monday when, we go completely electronic. And I don't need to point it out to you that was the low, and the market, has rallied almost unchanged now in the equity market. So what I'm looking at is this obviously a bull trap in equity markets?
Oh my God, yeah.
Mm-hmm. Yeah, because
I think you need a retest of the lows or not a new panic low.
But before you retest that, shouldn't we retest the highs?
No. If you think you're going back up to 29,000 on the Dow, I mean, I'm a betting man. But
well, I know that. So it's interesting that I'm talking to you from a trading point of view, which is really why I enjoy talking to you in that sense, because you're a trader. You're a real trader. And so what I'm hearing, in terms of the chatter out there, so to speak, is that with this kind of stimulus, which is unprecedented, it's QE, to infinity.
Also going into significant more debt, though.
But that's been the problem. But it hasn't, or it doesn't seem to be the problem to the current leaders. They think that if they follow the Keynesian, economic system and just keep pumping, at some point you're going to get economic recovery, which is not the case based on what happened.
This is different.
What's that?
To get people back. This is completely different this time around.
Yeah.
This is not about just trying to stimulate an economy.
Right.
This is trying to save from a severe depression.
Right.
Okay? You still need people to go out and spend money. You got 26 million people out of work. They're not spending anything, right? So who's going to go to a bar?
Correct.
Who's going to go to a restaurant? Who's going to go and do anything that is going to stimulate the economy? They're going to be more petrified now than ever.
Mm-hmm.
It's going to take years to create the confidence level to get to that level.
Mm-hmm. Yeah, you just feel that if you go out, just locally, if you go to the supermarket or whatever it is, for
I go to
things.
The supermarket, I look like I just came out of a hospital ward. I mean,
Yeah.
Come on, I'm wrapped up to the nine.
Yeah, you got to be. I think the unknown factor is, I think, what really is in danger right now. And we don't have yet the kind of leadership that provides the testing required, and so on and so forth. So we're behind the curve in that sense. So, but what I'm trying to digest is that there's still some thought out there that, in fact, the E-mini is going to go to 3,600. So
I think they're on more. I think they're on morphine.
I would like to find out what the basis is that they're using, but I can understand with interest rates possibly, or the stimulus supporting the market short term, which I think is a possibility. And, I think we're coming to that ceiling that you're talking about, which I think is the 28, maybe 2850 area, where if we are going to see some kind of a reversion, hitting resistance, so to speak, or even what we call distribution of supply, then, I think we could be right around the corner is what you're saying. Hello? Are you there? Hello? Hello? What was the last point here? Basically, that the market might have discounted the bad news, so to speak, on buying the rumor and sell the fact, and may test the highs and potentially be a bull trap, is what you're saying up there.
Oh, I wouldn't buy them here with your money. No way.
Okay.
No
Okay.
way. Absolutely not. I don't care if they go another 300, 400, 500 points. I don't care. I think the downside, the risk to the downside is more substantial than to the upside. I mean, you got to.
Right.
This is classic. This is classic. I would never want to be long up here.
So you want to be selling the rallies?
Yeah.
Yeah.
Absolutely.
What do you recommend or suggest for people that have IRAs or have, their retirement accounts, at this point, if they've been, in the market for a long time, what do you recommend? What do you suggest?
I mean, I laugh at people that are, that are holding stocks and who are in their mid-60s or 70s because, they're not working, they're relying on this money. And then you get a market that's up, from 17,000 to 29,000. I remember, I think it was about sometime early January, I was telling a lot of people that, I was looking only for a pullback to 27,000, but to liquidate equities, to look for a sharp pullback to buy them again. And a lot of people sold it on the 29,300, 400. But it's like, what are you supposed to do? Just buy and hold and just forget you own it? I mean, and then when the blank hits the fan, like, oh my God, I just lost 30% of my retirement money. Well,
right.
This is real life.
Right.
I mean,
right.
Happens.
On top of interest rates being near 0%, losing any equity that you built kind of compounds the problem, doesn't it?
Well, not just that, though. It's more predicated on the fact that people became very complacent. I mean, out of left field, this happened, right? Out of left field.
Right. Right. So, black swan, yeah.
Yeah. So, but anyway.
So.
All right, buddy.
Let me. You got to run.
Yeah.
All right, man. Listen, I appreciate your time, and we'll continue to do this whenever you're available. It's always great to talk to you. You have a great day.
Okay, buddy. Thank you. God bless you.
Take care.